The 50 pips a day Forex strategy is a great option for traders who want to gain a nice profit with minimum interaction. All you have to do is open two opposing pending orders and select a stop loss and take profit order for the order that is executed, then cancel the other one. Are you just starting in the Forex trading field and are looking to learn the easiest and the best strategy? In this case, the 50 pips a day Forex strategy is one of your best options because it allows you to easily earn an average of 50 pips on a trend movement. What is the 50 pips a day Forex strategy? The 50 pips a day Forex strategy is originally a day trading strategy that is designed to work in 1-hour time frames and aims to profit from approximately half of a currency pair's intraday volatility. However, this strategy works with a limited number of currency pairs only. The best currency pairs for this strategy are the big ones, such as pound sterling to US dollar and euro to US dollar. Pros of this strategy. This strategy is indicator-less. This means you do not have to spend a lot of time each day looking on the charts and look for different indicators and graph patterns. It does not require constant monitoring of the monitor. With this strategy, you do not have to constantly monitor your trade to identify the best time to open or close them. All it takes is a few clicks in the morning. Cons of this strategy. You can open only one trade per day for one asset. If you are one of those Forex traders that enjoy opening multiple trades per day for one asset, this strategy might not be for you. It works for a limited number of assets only. This strategy is mostly suitable for big currency pairs like EURist and PUST. Your maximum profits are 50 pips a day per trade. Although this strategy is a simple one, it is not the most profitable one. Multiple other strategies allow you to gain higher profits, but they are more complex than this one. Main rules of the 50 pips Forex strategy. The 50 pips a day Forex strategy is probably the easiest Forex strategy you can use. And to put it into practice, you only have to follow a few simple steps, which are: set a 1-hour candlestick to 7 a.m. Greenwich Mean Time on your chart. This time zone works best for this strategy to capitalize on the daily movement. When the 7 a.m. Greenwich Mean Time 1-hour candlestick ends, you should place two opposing pending orders. The first pending order is a buy stop order placed 2 pips above the high, and the second is a sell stop order placed 2 pips below the low. The price of the currency pair will move towards one of the orders and will activate it. The moment one of the orders is executed, you must cancel the other one. For a buy order, you should place a stop-loss order approximately 5 to 10 pips below the low of the 7 a.m. Greenwich Mean Time candlestick, and a stop-loss for a sell order should be placed about 5 to 10 pips over the high of the 7 a.m. Greenwich Mean Time candlestick. Place a take-profit order of 50 pips. The position will be automatically closed when the price of the asset hits the stop-loss or the take-profit order. However, in some cases, the price might not hit any of these orders by the end of the day, and you might have to decide if you want to close it or leave it open for longer. The risk management in the 50 pips Forex strategy. Although the 50 pips a day Forex strategy is simple to use and it usually brings profits to the traders who use it, it can also bring them losses. So, traders should not risk money they cannot afford to lose. Although some traders might be tempted to use large leverage to increase their profits, they should know that leverage is a double-edged sword. It can amplify the profits, as well as the losses. If your broker allows you to place a trailing stop-loss order, you should use this opportunity. The advantage of a trailing stop loss is that whenever the price of the asset moves in your favor, the stop loss moves as well, helping you secure your profits and minimize the losses. Is 50 pips a day strategy good for me? The 50 pips a day Forex strategy is a great option for traders who want to gain a nice profit with minimum interaction. All you have to do is open 2 opposing pending orders and select a stop loss and take profit order for the order that is executed, then cancel the other one. So, if that sounds exciting to you, you should try it. This strategy is most often used by intraday traders who prefer to close trades at the end of the day because it lets them secure the profits gained that day. But it can also be used by swing traders when the price of the asset does not hit the stop loss or take profit orders during that day. These traders leave positions open for at least 2 days because they think the asset will hit the take profit order the next day.